What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 14th of 2019. Well, folks, I hope you all are having a great day wherever you are, and today we've got a wide range of important topics to discuss here on the update in regards to both crypto and traditional markets. For crypto, I want to spend some time to not only talk about a recent custodial solution that's come to the table from a pro-crypto, well-known Swiss bank, but along with that as well, I want to spend some time to talk about the recent comments from the Winklevoss twins for some of the hot buzz topics of stablecoins and security tokens, why they're optimistic, and also why I'm still a little bit on the fence. But for traditional markets, a big headline we gotta go through has to do with PGE, one of the well-known utility companies in the United States, on the verge of bankruptcy. So we're going to be making sense of the whole situation, and then also kind of talking about what I'm looking for over the next few weeks. Outside of that as well, though, U.S. futures are down at the moment on weak China data at the moment. That's usually the catalyst that they're going to be pinning at this moment, but it does make sense. People are worried about a global slowdown at the moment. So we'll be talking about that later on in the video. Without further ado, let's go ahead and dive into the update. Two things I do want to point out, though, before I do dive into it, guys. As you probably noticed, I'm not sitting down. You might have noticed that I'm standing up in the moment because I just got an adjustable standing desk. So I've actually really liked it so far, and if you guys feel that it would interrupt the videos and or if it improves it, leave it down in the comment down below. Leave a comment down below and let me know what you guys think. I think it's kind of good because I can stand up and you know, kind of be a little more alive rather than sitting down all day. But at the same time, again, want to make sure I can adjust it every time I want to do a video or do something else. So just let me know in the comments down below. And along with that, I just wanted to let you all know I've been having to prepare for it myself because I do quarterly taxes and things of that sort. But tax season is around the corner. And as you all know, one of our sponsors for the channel is TaxBit. Just thought I'd let you guys know. We're going to have a link down below that you guys can check out in that case and use a referral code for that. But just wanted to let you guys know because it is getting towards that season. You can write off a lot of your losses in regards to crypto. It's a big thing I've obviously going to be taking advantage of this season. Alrighty, so let's go ahead, guys, talk about the crypto market at the moment. Talking about losses, there has been a recent decline in crypto from what seemed like a rebound rally in the market, and this is something that I had feared. We talked about kind of the two-way trade, waiting for a catalyst at the moment, and now it looks like we're going down to retest the lows. So we'll talk a little bit about that as we go through TA. I'll talk about what we talked about in the last update, but at the moment, guys, you don't need me to tell you this. I mean, we can take a look across the board. Outside of a few oddball players, and actually a lot of them being stable coins, we can see here that most cryptocurrencies, thank God Dentacoin is at the top. I don't even know what Bugira coin, I don't even know what that is. But anyways, you can see here across the board, even Ethereum kind of taking up the top here, down 22% over the past week. So not good to see here. A lot of this happening over the past, really back a few days ago when we had a pretty stark sell-off for about a 2-day period. But again, as Bitcoin went down, altcoins are going to follow. It's not rocket science. Nonetheless, we are still a little bit up from where we were on the lows. So we've got some range that we still need to go downward. We've broken past a level that's gotten me confident that we're going to come back down to these lows. We're going to test $100 billion again. And again, volatility is not too crazy at this moment, so I think it's going to be a nice, slow, steady decline. I don't think we're looking to break past 3,000 at this moment. It just doesn't signal that to me. But at the same time, it makes sense, guys. We're not seeing volume in this market, and we'll talk about that as we go ahead and look through Bitcoin in just a moment. But Bitcoin dominance, though it got close, looks like it's clearly going to come back up to the highs here around 54 to 56% as altcoins continue to deplete and as Bitcoin continues to deplete back down to 3,000. So again, not too crazy this moment to understand. I want to talk about, the reasoning we had in our update the other day, and sadly, I think the video got uploaded a few seconds or a few minutes too late or something. Basically, on the last update, we covered it back on the 10th here. Over the past few days, been doing some other types of content as well outside of just daily updates. We did the Wimble video and a few other things. But basically, what we talked about was as this price was completing the BART chart here, came back down to where it was beforehand. We could see that price was, hanging by a thread in this case. We really needed to see it get a bolster upwards. But again, another big set of volume came in, even larger than the previous one, at least here on Coinbase, and broke through. And I said if we were to break below this level, things are going to continue downward in this case, and that we're most likely going to come down and test down towards the lows. If we were able to hold and continue making higher levels and get back above 4,000, I was confident we're going to go up to the 100-day. But we didn't get that, right? We broke below here. It's pretty quick and easy to tell, okay, the trend's been broken in this case. We need to go lower. And that's what exactly has been playing out over the past few days. I honestly thought it would be a little bit faster, to be fair, but nonetheless, we are still moving lower. We're still hanging towards those lows. We've broken that key level of support at 3,600. You can see where we held price here, and we held price over here as well. So it's not good to see, but at the same time, it's pretty clear to understand where this is going. You can already see today's candle has not been getting much upside action, and if there's anything down there, it's actually sold off. And I think more than anything, you're going to be looking for the RSI to go to the oversold range again, right? We need to get this coming back down here onto this line that was previous resistance. And what's nice is that we're still going to be able to make it support if we can hold at 3,000, right? So again, very interesting to see. I want to see it come back down here and then eventually get back above the 50-day and potentially test up towards some of the higher moving averages. But this is going to be a slow movement, guys. And the reason I say that is because it's become more and more apparent over time that this market relatively is dead right now. I'm not going to lie, guys. I love crypto to death. It's not dead in its entirety. I love this market. It's going to be massive over the next few years. But in the short term, we can just see volume is abysmal right now. No one's really trading this market. You can see at any given day here, we're getting like 5,000, 8,000, 14,000 in volume. Whereas just a few days ago during the rally, we were getting, double-digit volume, double-digit thousand Bitcoin volume on a day-to-day basis. And you can tell it was clearly buying volume. Come over here. I mean, the volume that we were trading was much more active on the sell side and on the buy side. So I think, because of that lowered volatility over time, we're getting less volume in this case. And less volume usually correlates to pitiful price action, usually to the downside. So again, not making any serious moves. If Bitcoin does come back down to this range, I definitely look for some people scrapping at these prices. But again, I don't know if we've seen an official low here, guys. We didn't hit 3,000. We were at 3,200, 31 to 3,200. We might need to come down exactly to the big even at 3,000. But we'll have to see on it. Again, the mantra here is that generally speaking, we're going to be going down for the next few days. And price action gives me a decent amount of confidence in saying that. Going on here with Ethereum, again, as Bitcoin retests lows, I think Ethereum's going to come back down. Not to mention, it would make sense because we saw Ethereum have pretty much 100% rally up to $166. It's going to probably come back down to 80 here, have 50% correction. Testing those lows again, double bottoming. Again, will be good for confidence to resurge back into this market. I think people want to see a technical sign like a double bottom. It'd be nice to see. Going on, we'll take a look at XRP. For XRP here, I mean, guys, it's not that difficult to expect it to come down to 28 cents. It's a 4-cent drop from this point on. So I think, honestly, XRP is getting hit less than anyone here in this case. And/or it might come down to this range and triple bottom. We've got two lows here. Triple bottom would be even better in this case. If you could get it down to 25 cents and test those levels, I'm going to be keeping an eye on that for Ripple. XRP, sorry. I know some people hate when people interchange them. But anyways, you get my point there. So those are really kind of the three players I'm watching at the moment, the ones that have a decent amount of liquidity, that are actually still making most of the price moves. As we saw, Ethereum dropped a lot over the past 7 days. It was in one of the top brackets for losses, but it was also on the high end for gains. A lot of altcoins couldn't keep up with Ethereum and some of the top altcoins, which is really interesting to see. Usually it's the opposite way around. Alrighty, so let's go ahead and talk about some of these article pieces here and some news points. I want to spend some time to talk about some relatively positive news. It could be a little bit of fluff, but we'll have to tell over time whether or not they start to gain some traction from partner banks and different types of exchanges and platforms. A well-known Swiss multi-billion-dollar bank has enacted a new custodial solution for cryptocurrencies and digital assets. And we'll talk a little bit about some of the few details that they've provided us from their website in just a moment. But this is a bank called Vontobel. I hope I'm pronouncing that right. But it's about a $3 billion not just specifically crypto. It's a $3 billion Swiss bank. They've been around for quite some time, and they've actually been quite pro-crypto for some time, because we can see they were actually one of the first companies to list a Bitcoin financial product in European markets on the SIX Swiss exchange back in 2017. So this was the Vontobel's Bitcoin certificate. So in this case, it would allow people to trade off the price of Bitcoin, and was one of the first entry open points. I mean, this is obvious. It's understandable why Bitcoin is popular in Switzerland and why people would want to trade it. I not only have a lot of personal friends in Switzerland who are huge on crypto. We used to do the crypto meetups there for Switzerland, and I have some close friends there. But along with that, Switzerland just matches as a prime candidate for a country to be behind crypto, and that's why there used to be, well, there still is. There's Zug, which is Crypto Valley, but at the same time, Malta has definitely brought up some competition. I'm getting on a tangent here. Major point here, though, is that we're in a necessary need for custodial solutions. We're in a big need for it at the moment because, let's be fair, guys, one thing that we have to accept here that I know a lot of people in crypto don't want to accept, as we talk about, one of the big benefits is that you can become your own bank. And that's very, very true. You have the option to do that. I personally like to keep a majority of my crypto funds in cold storage, right? I don't like it on exchanges. I don't like having to deal with that. And I like being my own bank. There's a little bit of independence that comes with it. That being said, there will be a lot of people who will want others to take care of their crypto. And that isn't always a worrisome case. There's a lot of ways with a ledger we can actually trace if someone actually has the money, right? We've been talking about a lot of these exchanges, and people have been talking about the proof of keys movement. You know, what's nice about cryptocurrencies is that they really do two things. You can have, for example, a specific way to track if a company has your crypto. In this case, if they have the crypto they say they do, you can look at the ledger, and the ledger does not lie so long as it's a secure network in the case of Bitcoin and a few other cryptocurrencies. And along with that as well, you can know, for example, that if something were to go wrong, you can see it happen, right? So I think it's something where we have to be a little bit of take it in a little bit of a middle down view in this case, because a lot of people say, no, everyone has to become their own bank, or some people say, no, crypto's never going to succeed. Again, holding that middle view of understanding what crypto really offers. Crypto offers a fixed monetary policy. That's the biggest thing above all. Not only that, but also censorship-resistant transactions, and also, again, a ledger that we can see, okay, you know, the money has not moved in this case, right? Again, very valuable, you know, assets in a sense. I'm not trying to play puns here, but a very valuable set of features for a digital asset to have. So in this case, I think it's good to see. I'm excited to see custodial solutions. There's a reason people are pushing for it, because there's a lot of people who aren't going to want to manage their crypto. It's why a huge chunk of crypto is on Coinbase at the moment. But they have some really good custodial solutions that they're coming up with that have to do with cold storage and things of that sort. And one thing, this is the actual Vontabell thing. And again, this is translated from Swiss German in this case. So if things came out wrong in this case, I might have some of my friends in Switzerland who speak Swiss German. But if you see anything from the translation that's wrong, please point it down in the comments down below. But nonetheless, the Google translation came out, and it came out quite clear. And one thing that I noticed is that it says, alternative to the previous personal registration and custody of providers of digital assets, the holding of private keys is eliminated, which is very interesting. I'm interested how this whole system's going to work. I hope they have some videos explaining it or some articles talking about it. Again, I wasn't able to find too much at the moment. I think this is relatively new from when they posted this. Nonetheless, though, very exciting stuff. Yeah, it just came out today on the 14th. But again, I'm going to be looking out for more information on this, guys. It's cool to see a $3 billion Swiss bank that's already been so pro-crypto coming out with custodial solutions. I think they're playing ahead of the game, and it makes sense, especially for a Swiss bank, because they've got a lot of clients probably over in the world of Swiss banking that want to use this solution. So very excited about that. Very, very excited. All right. So let's go ahead and talk a little bit about the Winklevoss twins and the topic of stablecoins and security tokens and how they believe that they are the future of crypto innovation. Now, I have no doubt in my mind that there is a lot of room for security tokens and stablecoins. I'm not the, you know, you'll get it later on. I think I've already talked about it before, probably once or twice over the past few months, but though I'm not a huge proponent or a huge fanatic around these ideas, they do play a decent role. The biggest thing for security tokens is that they will offer the opportunity for a wide range of people to invest in things that probably they weren't able to invest in before because A, they're too large of assets, or B, they're not on liquid markets. So this would be ranges from things, for example, buying partial amounts of real estate property, or I can't go out and, I can't go invest in a property myself, probably as an individual, but I could go with thousands of individuals and buy fractions of properties. And I could actually not just buy fractions of a single property, I could buy fractions from a variety of properties, and I could be well diversified if one of the properties fails. And this goes all the way over to things, for example, as we mentioned with illiquid markets at the moment, investing in art and all kinds of different things that don't have tradable markets at the moment. So this is where I could see security tokens coming in, because they help in situations where we haven't seen innovation continue in traditional equities or securities in this case. And stablecoins as well do provide a nice feature in the sense of, exchanges, for example, when people are trading between fiat to crypto in this case. And we're obviously getting much better candidates from the, well-ridiculed Tether. We're starting to get things like USD coin. We're starting to get, there's TUSD, TrueUSD, which is, has auditors and very solid practices. So that all being realized, I can see there's some value set. So I want to talk a little bit about what the Winklevoss twins talked about, some quotes that I really liked from the article, and then go on to talk a little bit about why I'm on the fence, the various reasons why I'm on the fence. So here's some of the quotes here. The ICO mania of 2017 we view as the pets.com of the securities token world. They were unregistered and it was crazy. It was a crazy town for about 6 months there. I think the next wave we will see is the real innovation and the really interesting assets that become tokenized, like real estate, like buildings that are not currently traded in a real liquid fashion. So that's exciting. Again, proving to the point that there is a market to build liquid markets for things that aren't tradable at the moment, right? Tyler pitched in to point out that the United States dollar pegged stablecoins, which are designed to experience less price volatility than non-fiat collateralized crypto assets, could notably be used to issue dividends in a prospective tokenized security sector. Now, this thing I actually found quite interesting. I didn't think about this before in regards to a potential dividend payment system, right? If I'm, for example, there's some platform that becomes mainstream, which is a platform for liquid tokens to be traded. If I've got my real estate properties in this case, or maybe I've got a loan of some sort, people need to pay me back in US dollars rather than maybe some other cryptocurrency. Well, they could pay me back in some stablecoin, or I could get a dividend in a stablecoin from the stocks that I own, or the securities in that case. So I found that kind of interesting. I thought that was a neat perspective. But there's a few problems I have with this whole idea of security tokens, and also with really, I think, the broader picture that people see for this market. I think a lot of people believe that when we talk about securities, we're talking about a wide range of different assets. But I think the biggest one people talk about is not so much tokenizing real estate or tokenizing fine art. I think we all can kind of agree that there's probably a market for that. But a lot of people believe that stocks are going to be brought to security tokens. And I have a hard time believing that's going to be the case. The reason I say that is because, A, most people don't mind using brokerage platforms. They don't, feel like they need to own their own shares in their wallet like crypto. Possibly there's a market for that. But along with that, it's just simply, to me, I don't see, for example, the one big innovation that tokens would bring is that they could bring fractional ownership, meaning, like, let's say, for example, I wanted to have a diversified portfolio, but I only have $500, then I could buy a fraction of Apple share, and I can buy a fraction of Microsoft share. That would be really cool. But the problem in the United States is that, there are specific age restrictions or specific wealth restrictions in this case. The biggest one being like investing in private equity. Let me use a better example, I guess not public stock. Let's say, for example, I wanted to invest in a new startup that's come up, right? And they were offering a token security offering, right? That would be great. I could buy like fractions of it. I can invest $15 in this startup, $10 in that startup, $50 in that startup. It would be awesome, right? Well, the problem is the technology is not holding that back from happening. You could do that today on centralized systems. The problem is that the regulatory environment isn't there. The regulations prevent me as an average everyday person, well, it depends on your income bracket, but someone who isn't an accredited investor, pretty much 1% of the population, from investing in these startups. Right? The only people who are going to get to invest in these cool companies now are angel investors and VCs. And that's not very fun. That's not very fair in my mind. And it doesn't matter how great you make these security tokens, that's never going to change until the regulation changes, right? So I admire the Winklevoss twins. I don't mean to talk negatively about them. I can't wait to see what they do in it. Maybe they even push the bounds of the regulatory environment. Maybe the technology is what pushes the bounds of it. Sometimes that's very common. So I'm excited to see how it develops. I wish them all the best. I think they're definitely been pushing. They've been pushing the envelope over the past few years, and I'm glad to see that they've really found their place in crypto. But anyways, nonetheless, let's move on. Let's talk about traditional markets. We got to talk a little bit about Pacific Gas and Electric. So this is one of the well-known utility companies in the United States along the West Coast in California predominantly. PG&E is on the verge of bankruptcy. So what has caused this, right? Why are we, seeing one of these well-known utility companies, which are usually very safe companies, going bankrupt all of a sudden? What has to do with what you've probably heard of before, whether you live in California or whether you live in the United States or maybe even outside the U.S., the California wildfires. Now, a lot of people have been curious, as to what caused these wildfires and a lot of things of that sort. It's a pretty contested debate in this case, but from what we know in this case is that PG&E has warned investors since back in November, back a few months ago this year, that there was a potential facing of liability for one of their electrical units going off and sparking a campfire. In this case, it's a campfire that started in the city of Paradise and spread to nearby communities, killing 86 people and causing billions of dollars in damage, which has been, again, one of the bigger wildfires this year. There's been a lot of them in California. But this kind of talks to a point here, guys, that a lot of these wildfires we've actually figured out have actually originated from areas where there's like electrical units, people, for example, humans making poor decisions in this case. It's usually actually what sparks the fire. And you've already got a very dry climate. You've got an area that's prone to it. And it's very sad to see how easily something like this can get sparked in California. But because of this, because they might be liable for this, the way we track basically origins of fire, the science behind it is very accurate, and they're able to trace back that there's a very high chance that PG&E is responsible for this. So this could be really bad news for the company. This means that they've got a massive set of lawsuits. The company is just going to get slammed to such a T to where there's so much damages that they're going to be responsible for that they just simply can't pay for it. Right? And you never would expect this from something that's stable like a utility company or something that seems safe and secure and has, every quarter revenue coming in, income coming in. Right? It was definitely a bad position to be in. And it's upsetting because, this is people's lives that have been lost. This is damage to the environment in this case. But along with that as well, we might see the death of a company that employs a lot of people as well, which isn't a fun story, right? This isn't just hitting corporate. This isn't just hitting, the board of directors saying, hey, have better safety standards next time. This is going to be probably the firing of thousands of people. Now, here's the thing I want to talk about. As much as that's kind of the doomsday scenario, I want to actually play devil's advocate to that. There's a quote here that I wanted to mention as well, and I'll get to my point here. The story also quoted Hill as saying, "I'm skeptical or just about anything PG&E says or does. Once they're in game, they could be notifying their employees of bankruptcy, and this is something again they have to notify due to a new law, 15 days ahead of bankruptcy before they actually file their employees of bankruptcy in order to scare the legislature into taking some action or the state into offering a loan of some kind, of a bailout of some kind." Now, in this sense, they make it in the quote sound like this is PG&E's end game, right? Like they're thinking deviously. And I will be true, I guess, in a sense, like they probably should have resorted to these problems earlier. But I have to say one thing about this, and that is that I think we need to realize that this utility company and its operations is not just going to vanish, right? This is something that, I haven't seen talked about in the media. The services that PG&E provides cannot vanish overnight. It is electrical power on the grid that everyone uses on a day-to-day basis, right? The natural gas that we need on a day-to-day basis. You can't just shut this off, right? The company's not just going to disappear overnight. So this makes me think that there's going to be a pretty happy medium, right? There's going to be some way in which they can meet to certain obligations, increase safety standards, and not see a massive layoff of people, see an absolute destruction of a utility company, and having to wait for all these decisions to be made as to what companies are going to buy up their assets in the liquidation. I just don't see that happening. I think PG&E is going to remain, but there's going to have to be, much like, for example, as much as this might sound negative for some people who are very big environmentalists in this case, I'm one of those. I do care about the environment in a lot of ways, but at the same time, very much like the Volkswagen scandal, right? There was the emissions scandal for Volkswagen, and we saw the fines reduced dramatically. And I think in some cases, yes, there are these poor decisions, but at the same time, the destruction economically that can come from this. It doesn't really improve the environmental standards that much, and in this case, it's kind of like adding more flame to the fire in this case. So I don't know. I'm just curious to see what happens. I'm just saying, again, if you remove such a large company like that, we can't get rid of the utilities in this case unless we all go to having energy independent homes, which takes time, as much as I'm completely cool with that idea. So anyways, I'd like to hear what you guys think down in the comments down below. I know it's a very sad case overall. There's no positive here in this matter, but I'd like to hear what you all think about this. What's going to come of it if you guys are interested in the whole equity space. So again, this is a PG&E stock over the past few months. Here you can see we've gone down from $69 a share down to $17.59, and this is expected to open up 50% lower. I think down towards around like 8 something a share. I don't know. I haven't checked the pre-market reading in a little bit, but should be trading in about 14 minutes. So we'll see what happens, guys. It's definitely a bloody time for this utility company, but it is like that for most stocks right now. So futures right now are tumbling, as I talked about. They're down about 0.8% to 1% at the moment. Again, we'll have to go check the indices when they start trading. But this is being mostly correlated to weak China data. And usually I feel like, honestly, I don't really bat an eye when I hear people talk about, weak China data, weak China data. This has been talked about for years, since 2015 and 2016. But it is starting to make a little bit of sense, guys. If we actually take a look here over really fall and the fall and winter of 2018 in this case, we can see that we've started to see a decline over the past year over year for imports and exports to China. And that's not a good sign. It's one thing to have a slowdown in imports in this case, less consumer demand. It's another thing when China's export economy is depleting. And China is a massive export economy in this case on the global stage. So when that's happening, these are clear economic signs. This is not manipulation of GDP. This is not manipulation of, wages and property values, things of that sort. We can see here that exports are slowing and imports are slowing. So this is not a good sign to see. It is a decent sign when you see these kind of point drops for the year. That is a decent sign that we are going to go from the crazy growth economy over the past few years, where a slowdown in China has been 5 to 7% annual GDP growth, to negative potentially, or lower, down to 0. And that's not good to see in an economy like China, which still has so much more room to industrialize. So again, very important data to look at. We can see here, if we take probably a look at the Qs here, I'll go ahead and I'll expand the chart here. It looks like we're down 0.9% at the moment, but I'm definitely going to be looking for this rally to start rolling over, guys. We were pushing sideways for the past 3 trading days. Momentum really stagnated. Volume was dying off. A big thing that I actually saw pointed out, actually I think from the chart of the week here that I use a lot, is that XLF. Look at XLF here, and just kind of, you have to think about what the price is telling you here. We have all these sharp days where there's a decent amount, much more volume in regards to the downside. And then we got the rally here, just like a dead cat bounce. We're slowing the momentum and pushing sideways. And with weaker volume, we can't get enough to break out, right? This is not just me being negative, guys. I understand there's a good chance that markets could potentially rally, but I'll be fair. Again, with these types of rallies, I would not bet that you're going to be going up, for example, to the higher range here. I'd bet good money on it. The reason I say that is because this sell-off and the volatility that we're seeing is unlike anything we've seen in a while. It kind of got worse than it was back in 2000 in early 2018, and it looks like it's going to be continuing to get worse because the VIX keeps making higher lows. Now, that's the thing I want you all to watch in this case when we're talking about markets at the moment. If markets do turn up today, they turn over and they start selling off again, volatility will pick up. This will continue to prove the case here that we're making higher lows on the VIX. You can see we're building higher basis every time, down here, and over here on this line. If we start to turn up again, we've now made higher lows on the VIX, right? We're building higher bases every time. This is not good to see. Now, if markets actually have a relief rally and continue today, and we smash through this level here, this line of support, we're probably going to come back down to 12, meaning markets are going to start rallying, and we're going to go up. So keep an eye on this key level here. I'd say around 16 points on the VIX. It's very important to watch and see if it holds this. But I'll be fair, I think it's going to turn up today, guys, and that means that markets are going to tip over. And if momentum really picks up, we get another 2 or 3% down day, don't think the party's going to stop there. It's going to keep going. Or, well, I don't know if party would be a good analogy in this case. It will be more of the bloodbath will continue in this case for markets. But again, has had a really good relief rally here nonetheless. Got to give credit to people, for example, who are more active traders, some people who bought the dip here for these tech companies when everyone was calling bloodshed. Very important. Again, watching simple indicators like the RSI can really help you out. One of my favorite simple indicators to use for markets. But again, we're not even overbought here. It looks like the momentum is stagnating a little bit. So if we reach down below here, I'd say probably around 156 to 158, you're probably going to get this continuing lower. So anyways, that's it for the video, everyone. Thank you all so much for watching. I hope you all enjoyed me during this video as I was standing up. I know it's probably improving the quality of the video tenfold. But again, leave your comments down below as to what you all think about that, and also what you think about in regards to what we talked about today, guys. Again, always appreciate you all sticking around for these lengthy videos. Love talking to you guys. And as always, I will see you all in the next video. Stay tuned.